Hello everyone, welcome back to our channel. This is me again, Money Mind. If you have not subscribed to this channel, please click that subscribe button and your like button so you can help this channel to grow. Following the footsteps of Li and Neo, the Alibaba-backed electric vehicle maker Xpeng Motors is expected to have an IPO on August 26, 2020. Which offer price could range to $11 to $13 to raise more than $1 billion by offering 85 million American depository shares. Each share of ADS represents 2 common shares of common stock A to a whopping valuation of $8.8 billion to be listed in NYSE ticker XPEV. Xpeng offers an innovative mobility experience through their smart EVs, software and services smart electric vehicle. Since its foundation in 2015, it has 2 cars on sale, namely J3 SUV and 4-door P7 sports sedan with price ranging from 150,000 yuan to 300,000 yuan would compete against Tesla and Neo. It targets primarily the mid to high-end market in China, with its G3 SUV was among the top 3 best-selling electric SUVs in 2019 per ISH market report. Accordingly, Xpeng's distinct market competitive advantage is its optional autonomous driving system X-Pilot 3.0. Their upcoming advanced autonomous driving system, which is expected to offer the highest level of autonomous driving capabilities in commercially available passenger vehicles, challenging Tesla's Autopilot. To date, Xpeng had delivered 81,741 of J3 and 1,966 of P7. However, it had a year-on-year sales growth of negative 23% when it delivered in 2019's first half of 7,165 compared to first half of 2020's of 5,499 deliveries. This growth might be affected by COVID-19 pandemic. Meanwhile, in 2021, it plans to launch their third smart EV, so I think this development could increase their sales growth along with their recovery from that pandemic. With that being said of their actual deliveries, we can see that Xpeng has the product to challenge its peers. However, it seems that they struggle with their profitability, having vehicle margin of negative 39% in the first half of 2019 and negative 5% in the first half of 2020. Their gross margin has negative 0.38% and negative 4% in the first half of 2019 and 2020 respectively. Also worth noting, their selling, general, and administrative expenses, it has in the first half of 2020 of 798.9 million RMB, an increase of 314.9 million from 2019's first half of 484.01 million. My question is, how come they have this much of selling and administrative expenses knowing that we have a pandemic? Don't they lay off an employees or postpone some operational expenses? Because SG&A must be equally proportionated to their sales in units. Imagine Its G&A is 80% of its total revenue in 2020 from January to June 30, which is 1 billion and 2,850,000 RMB. So, what cost measure they have done? Right? So they should manage these expenses effectively if they want to flare with NIO and Tesla. We all know that EV is a very competitive market, and cost measure is number one. It's a number one thing that each company must address. Likewise, XPeng has a better liquidity position as they're mainly using preferred shares as source of their capital instead of having debts. In December 2019, it has a current ratio of 1.5 compared to NIO's 0.52. Meanwhile, in the Q2 of 2020, they have a current ratio of 1.13 compared to NIO's 1.16. So this one shows to us that XPeng is head-to-head with its closest peer, NIO, with regards to financial liquidity. Meanwhile, solvency aspect, XPeng is also better than NIO, having negative 0.94 in December 2019 and negative 0.75 in Q2, compared to NIO's negative 3.09 and negative 3.91 in December 2019 and Q2 of 2020, respectively. However, preferred shares also have some risk, being partly equity and liability, cause investor has the power to redeem its full value than converting it to common stocks. As a result, XPEB has an accretion redemption value of 1.2 billion RMB in June 30, 2020, worsening the net loss attributable to ordinary shareholders. So, should you buy XPeng stock? I expect opening stock price will be over $13 due to existing shareholders including Alibaba and Qatar Investment Authority, Prime Cap Management Company, among others, had indicated interest in purchasing amounting to $500 million. By its fundamentals, assessing its liquidity and solvency, with the exception of its profitability, which is actually understandable because it's still a startup company, with that intangibles of Jack Ma or Alibaba, we all know how he is strong in the business community in China, in the North America. But having this offering price of $11 to $13, to me, it's very expensive. We are paying a high premium, as XPeng will be traded at 8.78 price to sales ratio, which is actually an almost 4 times compared to NIO's 2.33 price to sales ratio. Therefore, I would not or recommend you buying this stock now. That is, be an observant, just see how this price goes and this stock goes up and deep. But I would consider entering at a price below $5. That's all for today, guys. So if you like this video, please click that subscribe button and that like button and also your notification bell so you will be keep updated on my upcoming videos regarding stocks so you won't miss any trading opportunity. Remember that I'm dropping at least 1 or twice video a week. Always remember that you have to manage or start investing right now, because at this time, you need to be money-minded.